What's up, everyone? All right, so I'm going to do my recap for today. Today was a disaster. It was a mess. I tripped out of the starting gate and things did not get better from there. Also, I broke my glasses. So I am squinting. I'm sitting on the floor. I'm on my traveling trading station, but there were probably a lot of reasons why I shouldn't have really traded at all today. And it began with accidentally, thought I was pressing the exclamation point, but of course, Shift 1 is also my hotkey to buy 1,000 shares. And my first trade began with me looking up and realizing I owned 1,000 shares of MGOL and I was down $136 on it. So it's no even point really looking at the chart. It wasn't a trade. It was a hotkey, just like a fumble. But I fumbled out of the starting gate today. So that was my first trade. That's not a good sign. That I guess happens, but man, that's not great. All right, and I'm down 6,500 today. So I've been on a nice green streak. In fact, I've been green. This is my first red day of the year. My last red day was, I don't know, sometime in December. I don't remember. But so it was a while back, which is good. It's always nice to have red days sort of fewer and further between. But it is a bigger day in terms of my biggest green day this month was about 6,500. So, but probably after fees and commissions, it was like 6,000 green. So now I've got a $6,500 red day, which after fees and commissions is probably 7,000. So this month, my biggest green day is a little smaller than my biggest red day, at least so far. It's kind of a bummer. But I do have, I can take solace in the fact that I've only had one red day so far this month. It's been a very consistent month. So that's all good. But why don't we look at today's trade? So one of the things that's really important as a trader is knowing when to quit, knowing when to throw in the towel on any given day. And that's something I've talked about a lot because it's always a topic. Every single day you have to make a decision of when do I quit? Do I keep trading or do I walk away? And on some days I feel like I leave money on the table and I walk away a little too soon. Other days I feel like I overstay my welcome and I give back more than I should. And that ended up happening today. So we'll start with, like I said, the first trade was MGOL, which was a loser, but a hotkey error. So we'll look over that one. We'll put that one aside. So RBLX was the second trade. So RBLX, this was a scanner alert. I'm going to scroll back a ways on the scanner. So this was early in the morning. It was like 8:15 or 8:30. I'll pull up the chart, RBLX. So we get an algo spike. News comes out and the stock spikes from $33 to $38 a share. And I was like, hello, that's what I'm looking for, something moving. And at that point in the day, nothing was moving. So RBLX right now, if we look at our scans for top gainers, I already have it up. Let's see. So RBLX right now is, where is it? Maybe overlooking it, or maybe it's not. It's further down. RBLX. Let me type it over here. It's only up 12% today. All right, so we have to go back to like 12%. Yeah, it's down there. So it's only up 12%. It's also got a high float. So why did I even trade it? That was a dumb trade. That wasn't a very good trade. It hit the scanner and it was right here, and I was like, whoa, it's squeezing up. It's got news, and look, it did go up 5 points. So I saw that and I was like, you know what? I'm jumping in. So I bought it at 38.50. I wanted to buy it at 38.50, but I pressed my Shift 1 hotkey, this time intentionally, and I got filled at 38.74, which was the top of this candle. It then dropped to a low of 37.65, and I took my $500 loss there, 496. I took my loss. It ends up coming back up, dipping down, coming back up again. It was a bit of a FOMO chase, which sometimes happens after you have a red trade. Something pops up and you jump in it quick, and that was not a good trade. So now I'm down 800 on the day. What in the world? That happened quick. EDSA comes up next. All right, so this was, so EDSA comes up next, and I'm like, okay, it's squeezing up, 7.8 million share float, and I punched it. It was coming up, and I punched it. I added it 325, and I added again at 350. Nice news squeeze. And then it drops here to like, well, it dropped all the way to 270. I stopped out at right around 3, maybe 290. So I added, and then it reverses 50 cents. And I'm like, what is going on? And so I was a little deer in the headlights for a second. I added another 2,000 shares at like 310. And then I stopped out of the whole thing as it broke 3. I was like, whoa, down $1,800. And this thing ended up going all the way down like 30%. It went up 30%, then it dropped and was down 30% on the day. So all of a sudden I was down 2,500 in 3 trades. 3 red trades, boom, 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 down 2,500. And that happened quick. So EDSA, this was a stock that had news. It turns out the news was bad. Initially, the stock starts squeezing up. And as a technical trader, I trade what's moving. I don't have time to read the news. You'll never have time to read the news when you're trading an algo news spike. But what sometimes happens, and this is one of those cases, it doesn't happen often, but it does sometimes happen, the initial move gets reversed. And it got reversed, and I took an $1,800 loss. So that's fine. I mean, that's all part of the risk of trading. Not really a big deal, but it is what it is. So then my next trade was on TCBP. All right, so TCBP comes up on the scan at 8:30 at 475 right here. And I jumped in that and actually made $2,000. Goes from 475 all the way up to a high of 645. That was not bad. So I made some money on that one. $2,000. But you can see I'm only up 593 on it. And that's because I added back right here at about 635. 630, 635 for the break over 650. I was like, okay, here we go. We've got something working. I'm looking for the break of 650, a squeeze up to 7, and that's not happening. Stopped out at 6, lost 1,500. So now I'm starting, and I'm sure you can tell. Now I've lost 2,500 in 3 trades. I made back 2,000 in 1 trade, so I'm down only 500. So now I'm kind of getting aggressive. I'm like, okay, here we go. Let's go to green, and boom, back to down 1,900. Shoot. Okay. So then DCFC pops up. And I bought 15,000 shares of DCFC. Okay, now I'm trading with bigger size. All right, starting to get a little aggressive. Well, I need to trade with bigger size. I'm down 1,900 and DCFC is a cheap stock. So I bought 15,000 shares at like, I don't know, 222 or something. It goes up to 228, 229. It doesn't break 230. I sell it for $1,000 of profit. So I make like some profit, but not a killer trade. So now I'm down 900 on the day. All right, trading my P&L. I got back in here at 25. It flushes down, and I lost on that 700. So now I'm back to down like 1,500 on the day. It curls back up and now breaks below this resistance level, support level, becomes resistance. And right here, I added back 30,000 shares. Okay, now I'm getting aggressive. But here's what I was thinking. Okay, we're breaking this level. We break 25, we're going to go through 30. We're going to squeeze up to 240, 250 at the open. This is going to be, it's the second leading gapper. It's on the top of the gap scan. This is the one. It's got the volume. It's got a decent chart. This is the one. Well, ended up not being the one. Hit a high of 27, and then it flushed hard. It flushed hard at the open, all the way down here to a low of, what was it, like 190, something like that. So I was in at 24 with 30,000 shares. I stopped out at about 210 and lost like 4,500 on that trade. And just like that, it went from down, 1,500 on the day or whatever it was to down 6,500. Boom. Max loss below $5,000. That's it. I'm done. And if I'd held it longer, I would have lost another $6,000. With 30,000 shares, it adds up quick. Both ways. Now, so I kind of stepped up to the plate here for that trade that if this had squeezed through 30, I would have made 3 grand on that trade. If it had gone up to 40, I would have made 6 grand on that trade, and I would have gone from red 1500 to green 35, 4500, right? But the stakes were a little high on that trade because with that kind of size, there's no small winner really or small losers. It's going to be big one way or the other. And when you're already red on like 4 out of the 5 stocks you've traded and you're down 1700, that's a risky place to take that trade. I've taken that trade a few times already this year. Almost every day last week and the week before, I started by going in the red before rallying back into the green. So I've gotten kind of comfortable with that. And today I had sort of that similar experience, except the trade that I thought was going to put me back into the green didn't. And so unfortunately, I just went further into the red. And this is the place to call it quits. So I have a predetermined max loss of 5,000. If I'm down below 5,000, I'm not going to take any more trades. I already have that set ahead of time. So every day when I come in, I'm saying I'm willing to trade, I'm willing to lose 5,000. And if I lose 6,500 because I take a trade that ends up being a bigger loss and it puts me a little bit below my max loss, that happens and that's okay. But below 5, I won't take any more trades. That's it, I'm done. There have been times where I've set that loss at a bigger number, like 10,000 or 15,000, because I'm in a hot market and I'm comfortable with going red 5,000 and thinking I can recoup it. But I'm not in that market right now where I think that that's possible. So I'm at a point today where I don't think that it's likely that I would recoup $6,500 in losses. And if I did take any more trades, I'd be risking going further in the red. And at this point, I'm stair-stepping down. I'm moving in the wrong direction. So I predetermined what my line in the sand was to call it quits. I crossed that line and I'm going to follow that rule. Now, I sometimes talk about having 3 consecutive trades being a reason to stop. And that's a great general rule of thumb, especially as a beginner trader. I've definitely had days where I've had 3 red trades and then they've been small red trades and I've rallied back and finished the day fine. And so I don't track, if I every time I had 3 trades that were red and then I stopped, how much money would I save myself in further losses, or how much would it cost me because I ended up recouping? And I don't have a way of really seeing that data. So I don't know for sure, but it's certainly true that on a day when your P&L looks like this, like right now is a great time to stop. I'm red on 5 out of 6 stocks. This is not a good day. Should I have stopped sooner? I probably shouldn't have taken 30,000 shares on that last trade of DCFC. I could have taken smaller size on it. And if it had worked out, then instead of being down 1,500, maybe I would have been down 1,000. And I would have been like, okay, I'm still off my lows and maybe I can, get a couple more trades. But that failing as a leading gapper by itself sets the tone for the day. And a couple of the early pop and drops set the tone already. So I was already trading a little too aggressively for an environment that wasn't very favorable for breakout trading. I probably should have seen that sooner and stopped and slowed down sooner. So that's going to cost me an extra 4,000. The 2,500 that I lost, that I don't feel too bad about. That's part of trading. But the 4,000 I lost on top of that was my lesson. And it's a reminder that the market will give you anytime you get a little complacent or you whatever. Don't adhere to that sort of mentality of trading the market you're in. That was my extra correction today to smarten up. So we all pay those. Mine cost me 4,000 today, and it's a bummer, but make it money well spent and follow your rules and be more aware for the rest, moving forward for the rest of the week into next week, as long as I can before, I get on a hot streak and I get a little complacent and then I have another, day like today where I have to correct myself. That's just the way it is with trading. So this is my first red day of the year, first red day of the month, which is good. I allocate to have 1 red day a week, 4 red days a month. So I'm a little ahead right now in terms of my red to green accuracy. Having had so far a nice month of January, but we're only in the middle of the month. So I've got a red day here, which was a quick reminder to tighten up, slow down, and I'll come back tomorrow. Be, of course, watching the scans. These are the tools that I use every single day while I'm trading. I wouldn't be able to trade without this. So I'll be looking at the scans. I'll be looking for opportunities, but it's my job to try to make good decisions. And tomorrow I'm going to try to do a better job of that. I need to. I mean, you know, of course, every trader needs to try to do better after having a red day. So that's where I'll be at tomorrow, trying to press the reset button a little bit and get green and then shut it down. And unfortunately, the opportunity cost of having red days is that you get a little on the defense. So you trade a little more conservatively as you're trying to recoup, but it's just what you have to do. This is all about managing risk. So right now I'm managing my risk by stopping where I'm stopping. You know, another trader might keep trading and end up being down, you know, who knows how much today. So I set the line with a dollar amount, which is an easy, that's an easy line to respect. It's impossible not to see it. The line that was a little more subtle today was like, you know, after this many red trades, or after having made back 2,000 then lost some, maybe that's the spot I should have. And that's very hard to see in real time, because you start to get a little clouded in your judgment based on the emotion of the loss and the gain and everything else. So I don't really expect anyone to be to be perfect at that. It's not probably possible, but you have to have some boundaries on your trading of where you stop and where you throw in the towel. So mine today was at 5,000, and I'm going to respect that. So that's it for me today. A reminder, as always, that trading is risky. Easy come, easy go. There's no guarantee for success. Whether you trade with me or you learn on your own. So take it slow. Practice in a simulator before you put real money on the line, and don't try to blindly follow me or anyone else. You've got to learn a strategy, and then you've got to have the discipline to follow the rules of that strategy. And of course, that's what makes trading so hard, is it's very difficult to have that discipline, and there's a lot of emotions that come into play. So take it slow, and I'll be back at it first thing tomorrow morning. I'll see you then.